Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for Mortgage News Network. That's brought to you by our friends at PRMG, working for your best interest. Last week we did see interest rates kind of try to break above an important ceiling of resistance. Tested it 3 times, but kind of started to back down. Well, don't despair. There is a floor not too far underneath us. We're in a narrow trading range, and we'll see if things can break out. A breakout in pricing to the upside, meaning lower rates, could be really good. There's a lot of room for improvement. So the key is going to be watch the 10-year Treasury at 2.82%. If the 10-year Treasury can get under that level, then mortgage rates have a long way to improve. You could see over 100 basis points improvement in your price. So let's watch for that. Let's look for that. Now, on the flip side of that, there is some good floors of support underneath mortgage bond pricing. So unless we get some really nasty news, I don't expect rates to get a lot worse during the course of this week. Now, speaking of this week's news, we do have a lot of housing data. Okay, Sheila, we do have GDP as well. And we have also got some things that I wanted to go over with you that occurred last week with regards to housing. And I think the media, we know how terrible the media is, right? And look at this. Here's a headline. U.S. existing home sales tumble to a 2.5-year low. Tumble. Tumble's a strong word. You imagine tumbling, and moving lower and falling with no support underneath, nothing stopping you, just out of control, right? That's kind of a tumble, yeah? Well, it was actually down fractionally, less than 1%. Less than 1%. Not an appreciation, no. Not home prices, no. In the amount of sales, which, let me just set this up for you. First of all, the previous month's number was revised higher. So when you take into consideration the revision up from the previous month, the revision, the amount that it was down was even smaller. And this isn't the amount of home sales. Inventory is tight. Rates are 0.75% higher than where they were a year ago. And we're talking about home prices having appreciated as well, making them more expensive. And yet, existing home sales are down about 0.5% on a month-over-month basis. Certainly not tumbling, okay? But this is what happens with the media. They're doing their best to strike fear in the hearts of your customer. Now, meanwhile, FHFA is saying that home prices increased 6.5%. You know what the media says to that? They say, home price appreciation's down. And there are so many people, heck, there are people in our industry that put pieces out. There are people in the media, certainly, that say, well, the previous report appreciation was 6.7. And they put out these reports misconstruing that as appreciation being down, meaning home values are declining. Listen, if you're driving in your car and you're going 60 miles an hour, and if you slow down to 30 miles an hour, you're still going forward. You're still gaining ground, just at a slower pace. Depreciation would mean you stopped your car, you threw it into reverse, and you were backing up. That's home prices declining. There's a big difference between going forward just at a little bit of a slower pace, which is probably healthier and more sustainable, than going backwards. And this is the difficulty that we have. The media is misconstruing it. People in our own industry are misconstruing it. And then your customer hears this. Your customer says, holy cow, maybe I shouldn't buy a home. Evidence of that came out last week with CoreLogic. Rents, which had been moving up at about 3.6% on a year-over-year basis, are shooting up 4.1%. You've noticed that home purchases have slowed down a little bit. I get it. That's correct. We are seeing that. That's okay. It's more of a balanced market. But because of that, those people still need someplace to live. By going into the rental market, they're pressuring rents higher. The rental market's already tight. They continue to do this. Rents continue to go up. And what do we see? You'll probably see home prices on a relative basis show themselves to be an even greater value. One of the best tools you could use for that is our buy versus rent tool, because it takes everything into consideration. It's not just cash flow. Take a look at it. Take us up on a trial. Take a look at it. Just look at one. I think you'll be blown away at the way that this system works and operates, how easy, fluid it is right from your phone. Hey team, I hope you have a great day, a great week ahead. Make it be very profitable, prosperous, and healthy. Talk to you soon.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MVS highway trial.
This is Mortgage News Network.